Contrarians, welcome back to the Encrypted Capital Recap for Friday, June 3rd. So first off, I wanted to touch on my previous video. I had mentioned that I thought hedge funds were behind Luna and the crash, and also behind buying up all of the assets post-attack so they can capitalize on Luna 2.0. What I forgot to mention in that was that they'd already been accused. Citadel, BlackRock push against rumors of involvement in Terra Luna collapse, says a report. So there was already finger pointing going on well before, my video essentially came out. And I had found this and I wanted to share it with you guys. So if you guys don't remember, this isn't the first time that Citadel has been in hot water regarding price manipulation of these currencies that have gone absolutely crazy. And it's not just cryptocurrencies we're talking about, we're also talking about inside the stock market. So if you guys don't remember, there was Robinhood and GameStop. Now, these are some of the CEOs. You had Kenneth Griffin, who's the CEO of Citadel. He's worth about 25.9 billions. You also got the BlackRock CEO, says he's only worth about 1 billion, yet they have like $10 trillion under management. So I don't know how accurate that 1 billion is. I mean, they're basically buying up everything right now, including real estate, trying to turn the average renter, I should say the average home buyer, into a renter as they are buying up real estate and basically inflating the cost of mortgages and housing. Now, it says that the court dismissed the suit, claiming Robinhood and Citadel prevented meme stock trading, but it is very widely known that Robinhood did prevent the trading of GameStop. Now, this was actually posted on their blog here, and I'm scrolling through some of these tabs I have here, but this is from CNET. So Robinhood did post a blog saying that it was limiting users by preventing them from buying stocks from several companies such as GameStop, AMC, and Nokia, and it cited the market volatility as its reasoning and would only allow customers to sell their shares of these companies, not buy or trade in any other way. This is very important because this happened at the very, very top, but when the price has already expanded the multiple hundreds of percents up. If you only prevent people from buying, and which means they have to sell, it inevitably crashed the market. Now imagine, this is all speculation, again, spitballing here, but Michael Burry was one of the big guys that was coming out talking about GameStop way before this pump actually happened. He was also known for basically calling the mortgage-backed security crisis back in 2008. Before it happened, he saw things that other people did not see. So how was he able to know that GameStop was quote-unquote undervalued? And he had had large positions in GameStop before this happened. You got to think these guys are very, very well plugged. I'm sure Griffin and the other gentleman from Citadel are probably pals, I would have to think, which is why a lot of this stuff gets coordinated and why there's already been accusations against them. So this is not just some wild conspiracy theory. This has already been out in the media, and I kind of just connected the dots and found this stuff kind of after the fact, but nonetheless, it all ties together. So they have been colluding together, and even though the judge did find them not guilty, these guys always kind of get off the hook, even if they did commit any sort of fraud or crime. I mean, just look at JP Morgan and Chase. They've been caught rigging the metals market, and they get a little measly slap on the wrist, maybe $100-200 million fine. No one cares. That's just the cost of doing business to them, right? Nothing ever really happens to them. They're still allowed to continue to do it. So not only do they pull this off, in my opinion, with Robinhood and GameStop, which started acting like crypto as far as the gains are concerned. You don't really see that in the stock market too much unless you're trading penny stocks. Now they have clearly have their feet planted in the crypto space. And in my opinion, this is what's taking place. Let me get these babies off here. So the Miami court did throw out the class action lawsuit, claiming the online trading platform colluded with Citadel Securities to prevent investors from buying popular meme stocks. So there wasn't enough information or evidence, I should say. But I mean, they literally posted this on their blog stating that they stopped people from doing it. It's essentially just like what Coinbase does. And I haven't really seen it happen too much on Kraken or KuCoin, but I have seen Coinbase and other exchanges where if the market's too hot one way or another, their website goes down. Happens all the time. Multi-billion dollar companies, somehow, some way, they just can't figure out how to stay online during these volatile times. This is their way of basically flipping the switch and cooling down the market. Not only that, you also have to think this is a way for them to keep out your average retail traders from either buying or selling so they can hog all the good entries and or exits depending on where we're at in the market. So this is what I think has been going on and will continue to go on, and it doesn't look like there'll be much ramifications to them for doing this. Now, we talked about Robinhood here, and we also brought this up in the last video. It says some investors got rich before popular stablecoin imploded. This was Pantera Capital that Dan Moorhead, like I said, former Goldman Sachs. These guys are in this game, and they are in it to win it, and they will destroy everybody in their path so they can make a buck. So just be mindful that these are the guys that you're going against. And I had this article here pulled up too, how a trash-talking crypto founder caused a $40 billion crash. This is blaming it on Do Kwon, which, yeah, he's the founder of Luna, whatever, and his algorithm was absolute dog shit, clearly, for this to happen. But you have to think that there has to be some collusion because it's not just this gentleman here. I do think that these hedge funds have and will continue to be involved, like mentioned before. And so I want to give a quick update on that. Also, like I said, if you guys didn't see the last video, Pantera cashed out 80% of their investment. They had how much money? It was insane. I think it was hundreds of millions of dollars. And last thing, this is why I am bullish on crypto right now, because we just had the Winklevoss twins come out and say that Gemini is cutting 10% of its staff, saying crypto winter is here. Funny that they're doing it literally at a 66% correction. We've seen this time and time again in these markets. I went back and looked at the XRP chart just yesterday, and you will see on that chart, I don't have it pulled up here, but we are prone to 60 to 70% corrections or more before we actually start moving to the upside again. So I believe it was a 1,500% gain in XRP, retraced 66%, went ahead and did another 1,500%, and then retraced again before the bear market hit. So this is what I'm seeing. This is what I'm looking at. Hopefully you guys enjoy the video. Don't forget, sign up for the newsletter. Great way to support the channel. We'll catch you all in the next video.